Shares of the special purpose acquisition company taking Donald Trump's media company public are soaring in the after-hours trade. You can see they're up roughly 6%. Let's get straight out to Kayla Tausche, who's got all the details on what exactly is behind the move. Kayla.
Well, Dom, it turns out that President Trump's media company is going to be getting a new and formerly high-profile CEO in Devin Nunes, a Republican lawmaker who announced that he would be retiring from Congress at the end of this month because of an opportunity that he could not turn down. And we've just learned that opportunity is as chief executive of former President Trump's new media company. That company was expected to go public with that ticker that you just noted, the SPAC. But we have learned at CNBC that SPAC is being investigated by the Securities and Exchange Commission and FINRA. More on that as we have it. But in a statement after hours, former President Trump says of Nunes, he is a fighter and a leader. He will make an excellent CEO, and that he understands that we must stop the liberal media and big tech from destroying the freedoms that make America great. So Republican lawmaker Devin Nunes to join President Trump's media company as CEO when he retires from Congress. We will see what's next for that company. Don, back to you.
It's certainly, Kayla, will drive some interest in that particular company, the ticker as well. Oftentimes in the last few months here, it's been one of the most searched tickers, one of the top 50 on CNBC.com, given some of the interest on what's next for that Trump SPAC and everything else happening. Thank you very much, Kayla, for that. I wonder, Karen Feinerman, I'm going to turn to you quickly for this one, because this is a company, like I said, that gets a good amount of attention. It's already up another 3% from where we just showed it before Kayla's report. What's your take on Digital World, given this Nunes news?
Well, if you look at they put out they did a pipe, $1 billion pipe, and they put out some sort of, I don't know if they call projections. It's more like total addressable market. And they make some assumptions that are, I don't know. I mean, at the moment, there's not a lot of there. Not that there couldn't be, but it's just interesting that they're getting a huge valuation on, so far, not a lot. I don't know if they're going to get it together before they actually close the merger. I'm not really sure. This is one of the crazier ones I've ever seen, and the warrants to me just seem oddly priced relative to the stock by a lot. I understand that, you know, you can't buy the warrants and short the stock. That's not an actual, like a true hedge, because they're slightly different securities, but it's crazy.
I think that there are some dislocations, no doubt, between the underlying and some of the derivatives that go along with it. I would turn to you, Dan Nathan, right now. What do you think? Is this kind of something that you were keeping a close eye on? Is there anything bigger in terms of ripple effects from this Nunes CEO undertaking?
The ripple effects is very on brand for a Trump organization to have one of the worst public servants of the last few decades join as the CEO of this company. And when I think about this, the SEC is investigating this deal. I don't think this deal is ever going to happen, to be very frank, because one of the ways that SPACs work is you can't identify the target that you want to go after beforehand. It seems very clearly they did. The other thing that's really important is we don't know where the investors came from. So the disclosures, Putin could be buying this thing. I mean, like this deal's never going to happen, in my opinion. All right, so clock a ticket right now here, people, and I'll just say grifters are going to grift, and that's what's going on here.
All right, the market's always made up of buyers and sellers, Dan Nathan, so we'll keep a close eye on that on Digital World Acquisition Corp. Devin Nunes becoming the CEO of Trump Media and Technology Group here. All right, switching gears from that side of things to oil prices heating up while natural gas prices send shivers through the market. Cold, you can see they're down 12%. The biggest players in energy are gathering in Houston for the World Petroleum Congress right now to discuss the future of the oil and gas industry. Of course, if there's an oil and gas story, Brian Sullivan's all over it. He's there, joined by Tellurian's co-founder and executive chairman, Sharif Souki. Brian, over to you.
Dom, and I'll bet you if you did one of your famous ticker searches, Tell would have been up there at some point this year, because the stock is up 158% this year. Sharif Souki, it's great to see you. Thanks for joining us here and back in person. It's great. Before we get into macro issues, natural gas was $5.50, almost $6 briefly. Now it's at $3.50. What's happened?
It's very simple. In this country, we have a reserve of 100 years. All we have to do is drill. When the price signal tells you to go drill, everybody starts drilling, and very quickly you reestablish the balances. So 18 months ago, we had gas prices of $1.70, no signal to drill. As soon as they went to $5, everybody's drilling, and here we are. So
what leads? We always say oil and then natural gas. Does natural gas lead oil in any way? What's the relationship?
So generally speaking, natural gas historically has been the bad news. I have a discovery that's the good news. I have gas that's the bad news. But for the first time, I think historically, on a global basis, gas prices are 2.5 times the level of oil prices. So the prices that you're getting for gas in China, India, and even in Europe now are the equivalent of $200 a barrel. And oil is trading at $75 a barrel. I don't think that has ever happened before. So today, because gas has some attributes that are attractive, it is leading the charge. What you would expect now, because at the margin they are interchangeable, is gas prices will weaken and people will replace it with oil. So I expect gas prices globally to come down a little bit and oil prices to come up a little bit.
I mean, it's amazing. It's 2021, and we're talking about power plants in China and elsewhere going back to oil or even coal. We're swapping coal for oil. What year is this?
They have done as much coal as they can, which is coal is almost as expensive as gas today on a global basis. So, and if you look at what happened in New Delhi last week, where they had to shut down schools, and
no power.
Because of the pollution. Because the pollution was so bad, they told government officials, stayed home, kids stayed home. We're shutting down everything for a week. So if you look at pictures of New Delhi today, it's appalling.
We were in the UK a couple weeks ago talking about the potential for England's energy crisis this winter. I hope we are wrong. It's not looking like we will be. Europe right now buying natural gas on the spot market at what, 22, 25?
Close to 30.
Close to 30. How did Europe get here? And where does this go?
So they got, like everybody else, they got complacent. We had low prices for a long time. Everybody thought, remember, 18 months ago, we're talking about lower for longer. Nothing could have been further from the truth. So everybody got lulled by that. And we're facing a world today where 7 billion people in emerging countries, soon to become 9 billion people, will refuse not to emerge. And for them to become to the same level of standards of living as the West, Europe and North America, we need just a 50% of the level. We need to add 50% to the energy supply in the world. It is a very, very hard task.
Well, I'm going to wrap it up with this because this is fast money. And so your stock has been, I mean, hot, and you probably won't comment directly on it. But LNG, I assume, is going to be a big part of that growth. Your valuation is, you know, has gone up with the price, Sharif. Is there still a reason for investors to be bullish and optimistic on Tellurian?
It is not even the first inning, because you can buy gas in the United States, as you said, for $3.50, liquefied for $1 and sell it for $25 on the water. The plant pays for itself in less than 2 years at the moment.
It's the warm-up. Not even the first inning.
Not even the first
Sharif
inning.
Souki, real pleasure to see you here at the World Petroleum Congress. Thank you.
Thank you, Brian.
So, hey, Dom Chu, so there you go. He's saying it's not even the first inning and throwing around some big numbers as the world can pretty much gobble up all the American gas that they can get and probably could use a little more, to be honest.
There still is an immense appetite for those particular products. Brian Sullivan, thank you so much. And, of course, the Sharif Souki as well. Let's trade it. Guy Adami, I'll go to you first. We've talked a lot about oil and gas companies and capital discipline, right? Not spending, preserving dividends, wanting to do buybacks, that sort of thing. Is oil and gas still a story where you can just go up and drill and get more product out? Or is it much more about that capital discipline these days?
Well, Tellurian would suggest, you know, that is the story. This is your opportunity. So in this instance, I think it is. Plus, by the way, with this stock specifically, it's a pretty big decarbonization play as well, which is going to fit into the ESG-themed funds out there. So this works. I think that's a really interesting company that we've talked about a number of times. I know Jim Cramer has as well. In terms of oil continuing to be a story, Tim Seymour talks about this all the time. Companies are much better run now than they were a few years ago, much more disciplined with how they're spending their money, which is a good thing. And although oil has been really difficult, obviously, over the last month and a half, and kudos to Dan Nathan, who's called that move, I don't think the oil story is over by any stretch. If you look at OIH quickly, traded down to those prior April lows, sorted down to the August lows, and we're seemingly have bounced. I think the OIH is interesting here, specifically both Halliburton and Schlumberger.
You know, Karen, the words I've heard a lot more over the course of the last several months have been commodity and super cycle in the same sentence. Do you believe that we're there? Is this like the early stage or middle innings of what could be a big run up in fossil fuel prices overall, kind of like we saw back in 11, 12, 13, 14?
I guess it would depend. That's a great question, but I guess it depends on what you think the economy is going to do. There's a lot of moving parts. What OPEC's going to do. Are we going to allow more production? I don't know. Are these companies going to lose the discipline they had? And if so, then you can see us getting more supply. And as commodities move, they're very, price sensitive to supply demand dynamic. But I don't have a lot of exposure to the space. For me, it's entirely in the OIH. I do think that we will continue to see, for a little while anyway, oil hang in there. And so the OIH has a lot of catching up to do relative to the commodity. So that's how I've played it, but it's not a very big position for me.
All right, Dan Nathan, over to you. I mean, do you feel as though this oil and gas story has legs?
No, I don't. And it goes back to what we talked about in the beginning of the show. If you really fear that we have this situation where growth is slowing, we've seen the dollar rally, we're seeing rates going higher. The last time we saw that, Dom, was when the Fed was coming off of their zero interest rate policy, and they were obviously tapering before that, and crude oil got cut in half, and the dollar had a big rally. So the Dixie at 96.5 is kind of getting back on its horse a little bit. The 2-year rate is rallying. I'm not sure how far the 10 years going. I just don't see tremendous growth prospects in 2022 that should bring crude up to that $100 level that a lot of people were calling for when it was just at $80. So to me, I see more of like a 55 to 75 sort of range.